One of the things that I think will eventually happen is the price of Bitcoin will become so large that just mentally people will have a hard time. Like, well, I can't afford $1 million or $2 million. Well, you don't have to buy a whole Bitcoin. You can buy 1/100 millionth, a single Satoshi. You can buy 10 Satoshis, 20 Satoshis. And ultimately, I think the Satoshi will be the unit of measure when we get to, I see the book behind you, when we get to the Bitcoin standard.
Wait a minute, everyone. Welcome to Bitcoinzilla, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. Bitcoinzilla offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with Bitcoinzilla. Subscribe now. In today's video, Mark Yusko shares his prediction on the adoption curve of crypto and its potential to reach billions of users, the importance of building a network of trusted sources, and staying informed about new tools and technologies. So without wasting any time, let's dive into the video.
Bitcoin is a better form of money. What is money? Money is an asset that exists in the absence of a liability. There's only one in the whole world, that's gold. Everything else sits on top of gold in the monetary system, which is currency. Currency is what we use as a medium of exchange. Belief, custom, and nation states issue it backed by debt, but gold doesn't have debt associated with it. And gold is ultimately being displaced by Bitcoin, this better technology, this better form of money. Well, what makes it better? Well, it's equally scarce, meaning the amount that exists relative to the new flow. If you think about gold, the reason it's been so great for so long, a single ounce of gold is still a single ounce of gold. It doesn't change. It's an inert metal. And what's more important is the value of that gold has held its value for about 5,000 years. You can go back to Cleopatra's time, exchange your ounce of gold, you get a fine person's suit. You go to the medieval days, you get a suit of armor. You go in the 1920s, you get a zoot suit. You go to Savile Row today, you get a fine person's suit. And so, but why isn't gold then going to go on forever? Well, gold suffers from two defects. One, let's say I had a bar of gold under my desk, which I don't. Like if I was Kyle Bass, I actually would, but I don't. If I had a bar of gold, and look, I think I'm a reasonably fit guy, but I could not break that bar of gold. But let's say I could. Let's say I could divide that gold in half. It'd be really hard to get it precisely in half. I couldn't stuff it in the computer and send it to you, Kelly. So here's the thing. All the Bitcoin in the world fits right here. Now I don't have any on my phone. Don't SIM swap me. I don't keep it on my phone. I keep it in cold storage, so you can't steal it. But if I had any amount on the phone, with a couple clicks, I could send it to you. Now that's interesting because I don't need a bank account. You don't need a bank account. We don't have to pay fees for a wire transfer. So Bitcoin is more portable, more divisible, and importantly, the scarcity, the amount of stock relative to the flow. So in gold, the amount of new gold that's produced every year roughly equals the amount that's used up in industrial uses or lost or stolen. So the stock to flow ratio is very high. That makes an asset scarce.
Bitcoin halving is expected later this month, but a confluence of factors is likely to set the cryptocurrency's fourth such event apart from prior occurrences. Halving, after which the rate Bitcoins are generated by the network roughly every 10 minutes is cut in half, typically occurs after 210,000 Bitcoins are mined or roughly every 4 years. Halving is expected this year around April 20, but some suggest it could happen even sooner. In the run-up to prior halving iterations, Bitcoin has scaled new highs in the months following the reduction in the crypto asset's rate of issuance. Recently, it reached a new all-time high before the current cycle's halving event for the first time. Analysts at Coinbase warn the market could be placing undue importance on price movements around halving without taking into account the context of broader market conditions. The performance of Bitcoin around previous halving events was most likely context-dependent. That may explain why price trends during different cycles have varied so widely, wrote in a March report. For example, they attribute some of the 45% growth before the second halving in July 2016 to uncertainties surrounding Brexit, and the 73% gain ahead of the third halving in May 2020 to the pandemic-era initial coin offering boom. Spot Bitcoin exchange-traded funds have fundamentally changed the market dynamics for Bitcoin, according to Coinbase, and they did not exist at the time of prior halvings. The products that began trading in January have seen massive inflows that have driven up demand and consequently the price of Bitcoin. The approval of Bitcoin ETF in the U.S. could significantly alter the supply and demand dynamics of Bitcoin, as inflows are roughly 5-7x the daily new units of generated BTC, said a 21 Shares report too. So, how does it play out in the context of the halving? In a hypothetical scenario, if the supply consisted of only newly minted Bitcoin, and existing Bitcoin were not available to be traded, here's what Coinbase said could happen. If we assume that the pace of new inflows into US-based ETFs slowed from $6 billion in February to say a steady state of $1 billion of net inflows per month, a simple mental model suggests that measured against TILD 13.5 QBTC mined per month in a post-halving environment, the equilibrium price for Bitcoin should be closer to around $74,000, they wrote.
What's happening to flow? Well, the demand for Bitcoin just inextricably rose. So if you think about, aggregate supply and aggregate demand, right? We just had a shift outward, an increase in aggregate demand, which means P0, P1, P0, P1, the price is where those two lines intersect. P1 is higher than P0. So whenever you have a limited supply asset, Super Bowl tickets. Why was this Super Bowl the highest price ticket in history?
Small stadium.
Because of freaking Taylor, right? And so, and I shouldn't call her freaking Taylor, but because of Ms. Swift. So everybody was talking about, so it became limited supply, smaller stadium, and ultimate demand. So price goes up. Okay, great. Okay, I'm the second to last year of boomers. My wife's the last year, so 60 to 85 is the boomers. They aren't going to hold their own keys. They're not going to have a treasurer or a ledger. They're not going to be degen. They are, however, going to call their financial advisor that control trillion with a T, $30 trillion. And they're going to say 1%. I want 1% of this Bitcoin stuff. So that's $300 billion. Here's the crazy stat, Kelly. That's more money than has ever converted into Bitcoin. There's less than 300 billion that has been converted from fiat into orange coin to make the $1.3, $1.4 trillion of market cap we have today because of the multiplier effect. All right, the people who bought it for pennies on the dollar, like this whale who bought it in 2010 at 30 cents and just sold the other day, okay, he didn't put a lot of fiat, so he now has a lot of fiat.
Bitcoin available to trade has been in decline since early 2020, a major shift from previous cycles, said Coinbase. Normally, a liquid supply is attributed to lost wallets and forgotten keys, but Coinbase analysts also mention the level of available Bitcoin supply has been trending lower over the last 4 years. And that's a departure from prior halving cycles. But that's not necessarily a bad thing for Bitcoin, since that could mean investors with long-term positions and less inclination to sell with short-term price variations. With more than $19 million Bitcoin in circulation and a supply capped at $21 million, the halving is making mining harder and slashing incentives for miners in half. Typically, miners sell Bitcoin ahead of halvings in anticipation of covering operational expenses for things like energy and mining equipment. However, the Bitcoin rally has led to fewer Bitcoin sales by miners who have up to 1.8 million Bitcoin in their reserves. Another key factor to consider during the upcoming halving event is the contrast of Bitcoin's predictable declining rate of issuance in context of the uncertainties around the U.S. Federal Reserve lowering its benchmark rates. The general thesis is if the Fed cuts rates, U.S. Treasury yields will weaken, making riskier assets, such as cryptocurrencies, more attractive to investors. However, unexpectedly robust economic data in the past few weeks has stoked the debate around rate cuts. Cutting too soon could revive inflation, but keeping rates higher for too long could push the economy to the brink of a recession. Other central banks across the globe have already begun to shift their monetary policy stance. The eagerness of major central banks to reduce interest rates despite strong economic growth has likely contributed to an increase in market inflation expectations, digital asset manager Grayscale said in a report. The risk of higher inflation may in turn be stimulating demand for alternative stores of value, like physical gold and Bitcoin. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.